Okay, so the idea, like I said, is to understand what they are doing and why they are doing what they are doing. Okay, if you cannot understand that, if you don't understand those two questions, I will always talk about four things. Where is price? Okay, where is price at the moment? Number two, where is price going to? Number three, why is price going there? Don't forget, number one, where is price? Number two, what is price? Okay, good. Where is price? What is price doing where it is? So if price is at a level of supply, what is price doing at the level of supply that it is? What is the level of reaction we are getting from that supply level? Okay, what is the price action inside of that our so-called supply area or area of interest or point of interest? Okay, the next thing you want to know is where is price going from here? Okay, so if I expect price to react off a supply, it means I'm expecting price to continue bearish. So if price is continuing bearish, where is price going to? Why should price continue bearish? If you can answer those four questions correctly and see your answers on the charts, then you will not just increase your win rate, you will also increase the logic behind how you trade. And then before you know, you will begin to transform into what a smart money trader should be. Okay, because it is not enough to be a smart money trader. Let me throw this out. Give me a minute. It is not enough to be a smart money trader if you think like every other person, you think the same way you've been thinking since you started trading retail, you think just like there is nothing extra, there's nothing special, there's nothing, you're just buying. Why are you buying? You don't know why you're buying. You just feel like from this point, price supposed they buy. Does it make sense? Is it how you should think as a smart money trader? Drawing panels. I'm trying to make more room on my screen. Sorry, I'm almost done. Don't want too much. I just want the stuffs I'm using. That's one of the stuffs I'm using. Okay, I think this is better. Okay, so what was I saying? We're talking about the logic behind trading. Okay, and then the logic is the most important thing. Once you can understand the logic, you understand every other thing. So some other person was asking me, how was I able to capitalize off the NFP on Friday? How did I see the setup? They make it feel like it's some sort of magic. The only thing we do is trade smart money setups. Okay, and then I'll introduce you guys to something very simple as fast as I can. Okay, if you trade London or you trade New York, you should be concerned with specific timing. I'm not supposed to be saying this on here because I still have people who, I have the whole crowd here, so I'm not supposed to be sharing some things I'll be sharing, but I'll try. Oh, see, my love is here. Gima, how are you? All right. So if you trade, my network is unstable. If you trade New York or you trade London, you should understand that you're working with specific timing. Okay, you don't trade London and then you're jumping into London looking for mitigations at 11 or looking for mitigations at 10:30 or looking for mitigations at sold. Okay, let's do something very quick. I'm trying to get you something very quick. Try and see if I can trace through a few post London stories. Looking for the best of scenario to explain what I want to explain. So, sorry, just this is something that happened post London. All right. Now, if you trade London, your time of interest, when you should be looking towards getting a premium move from price should be around 8 o'clock a.m. Nigerian time or 8:30 a.m. time. Okay, I don't know who's on my background. I don't know if it's my network that is making noise or somebody's unmuted. Okay, I think it's my network. Choco, I think that was you. Okay, so if you trade London, you should be looking at 8 o'clock or 8:30 a.m. to expect the opening move that ushers you into your bigger moves for the day, the explosive moves to begin. And then you should be considering 10 o'clock for your re-mitigation. Okay, if price fails to mitigate your entry or gives the first mitigation at 8:30, it will give you the next mitigation at 10:30, and then it will continue for the rest of the day in that direction. Okay, there's something called the Judas swing. After now, I'll try to do a course on the Judas swing. This video is not supposed to be around technical entries and all of that. And then I'm restricting myself not to explain too much of technicals on this video because it's not what it's supposed to be about. So I don't end up saying too much than what I'm supposed to say. Okay, but then just a simple hint for those who trade London. Okay, so let's see it on the chart quickly. So this was a 7:05 UTC is 8:05 Nigerian time. So that's still 8 o'clock, right? So this mitigation happened at 8 o'clock, and this was about 9:30. I don't want to explain the logic of how I would have taken this for a re-entry, okay? Because there was actually a reason to do that if you understand the concept of liquidity. Okay, and then I actually have a nice liquidity grab here that a lot of you may not see as liquidity grab because of the concept or the way you have positioned your mind to trade. And for those of you who are on the mentorship, we'll be having an amazing, very, very long session of liquidity for the rest of the year. We'll be teaching just liquidity and market structure for the rest of the year. Okay, so to try to see how we can change a few things with the way we trade and then grow from that point. Okay, so let's just see the setup on AUD card, AUD USD. I said I'll talk about. Which of the AUDs? AUD card. Okay, so let's see AUD card. Let's see AUD card and we'll be done. I'll just talk a bit on psychology again and we'll make progress. All right. So just navigate this. You guys, this is my, okay. I want to use my monthly time frame. And all right, let me use 1 month. It's not going. It's not going. I don't know why it's not going. Let me use my daily time frame. Okay, yeah, that's true. My subscription on TradingView expired and I'm yet to fix it, but it's okay. I think we can still work out something, even if it would deprive me of a lot, because I can actually show you guys what I really want to show you guys on this time frame. Everything is still choked. Everything is still quite choppy here. I needed a broader time frame so I can explain the full story and then give you guys a top-down analysis of what I expect to happen. What I expect to happen this week on AUD card. Okay, let me just see if I can do something quick from here. All right, so at this point we have this break of structure, right, on the daily time frame. Okay, and then we have this huge drop that happened after NFP. I wanted you guys to see my target area. I'm not enjoying what I'm trying to do here because I can't see anything on my left. I need to be subscribed back to TradingView to explain what he wants to see. It's still very tight, still very, very tight because my take profit is on a monthly low. My take profit is on a monthly low and it's over 400 pips. It's supposed to be a nice swing trade. I don't know why this is I can assess my monthly time frame. If I try to do that, it takes me back to 30 minutes. It's taking me back to 30 minutes. Okay, what will happen is that I should fix this subscription tomorrow, and then I'll do a recording explaining the scenario I expect on AUD card, and then I'll share it for you guys on the group. That's what I'll do. That's what I'll do. So I'll just let it be for now. Okay, so we'll just continue our conversation on logic very quickly. All right, so I was talking about Euro USD, right? Now, okay, good. Let's just use this briefly. Okay, why is price heading for this region? Okay, and the quick question, the first question, question number one, do you think price will violate this low? Yes or no? Do you think this low will be violated? Anybody with an answer? Somebody answer.
Yes.
What did he say?
Yes, sir. Yes, sir.
One yes.
Yes,
Any no?
sir.
Do we have a no? Any no? No. Okay, so why do you think this low would be cleared? Why do you think price would clear this low?
Because the trend is bearish.
If that's all,
We're seeing this.
because well,
The previous high has not been taken out.
because the previous high has
Price is creating lower highs and lower lows.
okay, the previous high has not been taken out. Price is bearish. Price is creating the lower highs and lower lows. If that's all the reason why you expect that low to be taken out, you're still very much a classical retail trader. And there's nothing, there's no difference between any other person can say that. That's what I'm talking about. The only difference between classical retail and we who call ourselves at the moment SMC traders is just risk to reward and logic. The logic that they do not get for some reasons. Okay, I used to be a very fine retail trader, classical retail trader. If I still want to trade classical retail, I'll trade classical retail expressly and very, very amazing as much as I want to. Okay, I still have very good guys who do that extremely very well and are profitable. Okay, so the only difference between what I do now and what I used to do then is the logic behind what I am doing. 4 questions. Where is price? What is price doing where it is? Where is price going? And why should price go there? We have bulk of liquidity as orders sitting inside of these areas from guys who try to sponsor a bullish move to the upside. So it means we have tons of buy orders at this point. Price is only interested in liquidity. Price is not interested in your where your lower highs or lower low. Price is not interested in that. The market makers are not interested in that. This is where we have liquidity resting. The liquidity that sponsored this move to the upside. That liquidity failed to take out this previous high. So it means that the bearish order flow is still very much in play on the large scale. Okay. Price is only, please get that. I don't know how best to explain it. Price is only interested in liquidity. Liquidity is money. Liquidity is fuel. Liquidity is what drives price. If there's no liquidity at a point, price will not come there. Okay, so if the point does not have liquidity, there is no business with price going to that point. What's it going there to do? Okay, so if price comes here and there's no money, what will he? If price comes here and there's no money, what will you do with this position? Is it forever? Is it for? The main reason why price is coming here is because the farmers will make more money. So they have to make more money. That's why they are coming here. Apart from that, they don't have any interest with your prices printing lower highs or lower low. If there's no money in the lower highs or lower low, it is useless to the big boys. It's useless to the composite man. Okay, so they have cleared, okay, we had liquidity resting inside all of this as internal liquidity. Okay, I have points of liquidity resting all of this. I have points of liquidity everywhere here. Okay, I have points of liquidity everywhere here. So the first move up was to clear internal range liquidity. The second move down is to both clear the internal range liquidity sitting here and also clear the external range liquidity, the external liquidity or expected liquidity sitting at this low. It's as simple as that. Now, if you look at this low, you know this low is a very weak ass low, very, very weak low. It has not done anything. In fact, I should expect price to clear this low expressly without even stressing this coming week. Okay, why? Why? Why should I expect price to clear this low? Somebody please give me an answer.
Because of the tons of liquidity around there.
Tons of liquidity around the low. There are no tons of liquidity around the low. Another question, another answer. This is where we have the tons. If you're talking about tons, yeah, there are liquidity here because we have lots of people who place buy orders into these tons. That cause, in fact, the market makers themselves also sponsored buy move. Okay, that cause all of this to drop. But then now there's something called cause and effect. Okay, I don't want to start taking you guys back to white. But then if you look at this, you see what's the momentum here? Look at this momentum here. What you see how heavy the momentum here is, right?
Yes, sir.
Okay, now look at the correction. Do you see how choppy the correction is?
Yes, sir.
So when the drop came back, can you see the momentum? So it means that smart money is not interested in these buys. Smart money is not interested in these buys. They are only interested in pushing price down. Okay, and then this low did not actually do anything good. Let's see. Let's see. Okay, actually did something good. Okay, grab liquidity from this guy. Okay, it grabbed liquidity from this guy, which is extra confidence for me. Okay, the moment it grabbed liquidity from this guy, it has played its part. It is useless to the markets. The moment it came down here and grabbed liquidity from this guy, it has played its part. The next thing for price to do, the same way this guy came here to grab some sort of liquidity from internal liquidity from this guy, I had it marked out on the lower time frame. The same way this guy dropped below this to grab liquidity from this guy on the lower time frame. This one came here and then cleared liquidity from this low, but it's still inside of this range. Okay, so it has played its part. Price now needs to come down and now grab the liquidity sitting where below this guy. So continue the story they had been writing prior to this time. Okay, now question number 2. How could we have possibly leveraged off this buy? Okay, that is the next question. How could we have possibly leveraged off this buy? What is the structure present on this chart? Okay, let's trace the market structure. So this is our high, this is our low rather, and this is our high. Right? This, right? Then what? Then this. Some of you would have marked this, right? And then do this, which is rubbish. That's not the point. Okay, the point is actually this guy. Okay, the point is actually this guy. Okay, because what we are actually looking at is what happened. Where did price react from? What is the area that price reacted from? Okay, so if you're reacting from this level is just a point of internal liquidity. Okay, this is liquidity. So why should you be considering this? So why should you be considering this as a low that should sponsor this move to the upside? While this only reacted off an unsupported base. Let me teach you guys something. A sniped block on your higher time frame is a breaker block mitigation on the lower time frame. A sniped order block on your higher time frame is a breaker block mitigation on your lower time frame. I'll explain how. If I go to my higher time frame, the whole of this area is my block. Let me see. Let me see if I can do that quickly. Are you able to spot that zone? I hope I'm not talking too much already. If I go talk now, talk with you, I suppose. I can't explain the source. I don't know why my chart is refusing to go to the higher time frame. What's going on? My chart is refusing to go to the daily time frame. No fun. This is not fun. This is not fun. Okay, let's just try. Just hold on. Let me see if I can access the 4 hours. I should be able to access the 4 hours. Let me check if the Wi-Fi is connected. Lock the Wi-Fi for me. All right. Just give me a minute, guys. I'm trying to get back on the internet. Can you still hear me? Curtis, can you hear me? Curtis, can you hear me?
Yes, I can hear you, sir.
All right, good. Thank you. All right, I think I can access my 4 hours now. Nice. So like I was saying, a sniped order block on your 4-hour time frame or on your higher time frame is a breaker block mitigation on your lower time frame. And every breaker block mitigation, once mitigated, the moment price returns to the area, that breaker block automatically becomes liquidity. Okay, I am sharing this to you for free. These few lines I just mentioned with my mouth, I paid good dollar to hear it, but I'm giving it to you for free. So for those of you who are not on my mentorship and you're hearing this, that is if you know what a breaker block is in the first place. But then, okay. So on a 4-hour time frame, let me clear the market structure out. The structural markup out. Okay, so I'll mark this out clearly for you guys. So this is my 4-hour time frame, and this is my 4-hour block, right? Okay, if I refine it back down to this a bit, good. All right, let me refer it back to the body of the candle, the body of the block. Okay, so price came here on the 4-hour time frame, tapped into the block, right? Sniped, look at it here. Very nice sniper entry on top of the block, and then what? It moved up aggressively, right? So this was a sniped breaker block on my lower time frame. If I go to my 3-minute chart or my 1-minute chart, price did not actually mitigate the other block. Price only mitigated the breaker block. It means that that level automatically in the future becomes a level of liquidity. Oh, I hope I'll be able to see that in again. Where was I? Okay, yeah, I think I found it. I hope I'm making sense, guys. Are we making sense?
Yes, sir.
Yes, sir. Yes, sir.
All right, good. So let's go to the breaker block. Okay, so this is the breaker block. If I want to mark this out from how some of you guys mark your breaker, which is still very right, I will mark this whole area as the breaker block, right? So we have price tap on our breaker block and then continue its move to the upside, right? Now, so many people, after seeing a breaker block mitigation, when they want to take sell re-entries, they will now begin to consider this place as the next POI. They'll begin to consider this place as the next POI, right? And then the price give you a reaction. Definitely, price will give you a reaction. Okay, price will give you a reaction. But then if you follow the blueprint I drew on the first line, you will understand that we need to take out what?
Okay.
Until we take out this area that proves that demand order flow, supply order flow is still in power. You don't have an RETU. You only have price at your POI. Until we take out this high, you don't have price. You don't have a reason to be buying this thing until you take out this high. Okay, so anybody who will jump in here and get stopped out, it's you and yourself. You need to see, this is the story that should be present here before I'll be willing to deal here. Good. Then I move. Until this high is violated, price is still within the range of my supply order flow. So it means that price can easily get back to this point, okay, and dump. Now, with the knowledge of the fact that a breaker block, once it has been mitigated, cannot actually be a nice order block, or the supporting base of that breaker block cannot hold price for price to do what it needs to do when price is revisiting the area. Because the fact is that the breaker block is not the order block. The reason for a breaker block is just to enforce liquidity. Okay, all this liquidity that was building up here was the reason for a breaker block. Okay, as soon as that happened, and then they were setting that, basic retail traders will begin to see what triple bottom formation. Okay, so when price gets back here again, they'll be looking forward to what? To buy, or support breaking becomes resistance. Okay, it will always give you scenarios you are likely to understand. Let me extend this. Great. So support broken becomes what?
Resistance.
Resistance for how many minutes? That's the question. That should be the question. Support broken actually did become resistance because they want to what? Engineer liquidity. So automatically we have liquidity resting above this area, which is fuel for price. Okay, so support broken becomes resistance. Now, when I was a retail trader, people who worked with me understand the fact that you don't have any business trading this support broken becomes resistance until it breaks what? This low. This low is what confirms that price is now willing to move, and then you can now make a breakout with test and what's continuation. There have to be some kind of logic that keeps you out of the general trend. Okay, but that's not what I'm even after. Okay, what I'm after is the fact that after price sniped your order block on the higher time frame and delivered this move, I was in this move that day. I think, yeah, this was a 1 to 21. I came out at 21 hour because I was not willing to hold for that. I had some other very amazing trades prior to that day, and then it was okay for me. Okay, so what was I talking about again? So your main order block is sitting somewhere around the extreme. Okay, so all you have to do is to notify where the liquidity is. I don't start teaching you guys that course now on liquidity. But so I'll just, instead of marking the liquidity, I'll just mark the full block. Okay, so for those of you who trade QMs, but for those of you who use your extreme, let's just mark the extreme. So I don't begin to share too much information on here. Okay, so let's mark the extreme and then we extend. So I don't run past where I tell them to go. But I beg you. Okay. I have just 10 minutes, 8 minutes. I'll use that to take questions. All right. So can you see that after price finished faking these guys that believed, now, where's the first point of liquidity? The first rubbish that happened that made people confused and all of that because they didn't understand the logic that once a breaker block has been mitigated, the supporting base of a breaker block cannot become a valid order block. Hence, price has to return to the extreme of the block that sponsored the breaker block. I will not repeat that. So if you did not catch it, glory to God. Okay. So once price violated this area, what was the next point? Everything here automatically became liquidity for price to absorb. Price came back to where? The extreme. Now, this is where the magic happens. This is where the magic happens. This is why I say it is almost impossible for my trade setup to leave me, except I'm not on chart. What do I have here? a what? Grab on liquidity from this low. Let me use my usual markings. Grab on liquidity on that low, right? Where is the structural high? Break of this structural high that was in charge of the supply order flow within that range, right? As B. What was the next step? Return to my what? Optimum trade entry. Optimum trade entry. Okay, I got stopped out on this trade at break even because I wanted to jump in extremely. I was already trying out some other stuff with minor liquidity zones I'm working on, trying to learn to use. Okay, so I did not enter here. This was where I entered. Okay, this was where I entered. And I entered here based on the same concept why I wanted to enter here. So for some of you, you may not be willing to, you may not even see what I entered off on this trade. Okay, so let's just stick to what we are working with. So if I was online, let me see point of indication. This would happen at 9:30. Okay, so if I was online at this point where this happened, this trade would have been a fine. Let's see the risk to reward ratio. So the next point of liquidity where I'm at, 1 to 15, amazing 15 arrow. Okay, so this was an amazing 15 arrow to the buy side. Okay, the same thing. Once price gets to, now do not forget that even as I mark this out, I will consider this area as an area of interest. And I would not engage an area of interest until it gives me my smart money footprints. What is the footprints that I see that should make me willing to now engage at that level? I must see these two things happen. My grab on liquidity, very visible. The break of the structure that was holding the area as the father of what? The supply or demand with respect to what the trend is saying. Then my return to optimum trade entry. Then I move from there. It's as simple as that. Okay, I don't want to say any more thing. I've talked too much already. So let's just take questions in 5 minutes so we can call it a night and get ready for Monday. Any questions, guys? Any question? Any question? Chef Chi, how are you?
I'm fine, thank you. Good evening, Banks. Good evening.
Good evening. Good evening. All right, so questions. Perry, how are you doing?
I'm good, sir. I'm good, sir.
So questions. If we don't have any questions, it means we are good to go. And then I'm super excited that you actually understood everything I was saying, which is a plus for me.
It's not like I understood everything, but by the time I watch a replay, I think I would get back with questions. I think that's just it. Sorry, sir. That's
okay.
it.
Okay. It's over. So I believe we're done for today. In course of the week, I'll try to drop a new timetable for my nights. Okay, so if you're a night, you know yourself. I'll drop a timetable for you guys this week. We'll be working with for the rest of the year. Let's see what we can run through. Yet to finalize the night course. Then those of you on the page course, we don't have anybody yet on the Sequoia course. So those of you on the page course, we're supposed to have series of meetings in the coming week or in this week. But after you have finished the videos I had sent for you guys already, then we can be willing to move to the next steps. But I want you guys to round up with that first. Then we can do other things. But until then, I think that's all for now. So I want to wish you guys an amazing trading week. And for those of you guys who are not live yet, I want to wish you guys an amazing study week. So ensure that you are deliberate with your study, and then you're putting in your best. You only get better. That's the most important thing. it only gets better. Okay, I was supposed to talk about psychology today. I ended up talking about entries. I'll try as much as I can next time to have a plain whiteboard so I can talk just psychology and not see my charts, because if I see my charts, I'll still be plunged to begin to talk about entries again. Okay, so I believe that's all for today.
Would the recording be dropped on the group?
It will be dropped on the night's group, not on the general group. Only my goons has access to the recording. It's not for, so, but then I'll send it to the guys in the mentorship group. And so that's why I want to know if you have questions so I can answer your questions now, because I'm not going to post this recording on the Signal group. It's not part of the package. Any other question? All right, then without further ado, let me let you guys carry on with every other thing you would like to do for the night, so I can get some rest myself. I'm stressed out already. I had a swell time. I hope you guys had a swell time as well. I'm looking forward to seeing you guys the next time we meet on here. Okay, so I think, yeah. No, I can't. If I send the video on, if I send the video on the Signal group, that will be me giving out. Okay, I know what I will do. It's all right. All right, guys. So you guys have an amazing night rest. I'll see you guys at dawn. Enjoy yourself and good night.
Thank you, sir.
All right, then. Good night, guys. Okay.
Thank you, senior man.
I greet you, boss. Bye-bye.
More than 50.
You know, carry family talk. You know, carry family talk. Come on from group chat, idiots.